just because President Trump was elected, and that's a good thing. We're not out of the woods financially and economically, and there's going to be a lot to talk about over the next few years.
Monaco 64, home of alternative economics and contrarian views. Well, with the gold market and silver market correcting quite sharply after a huge move up this year, I thought it would be interesting to talk to Andy Schectman, president of Miles Franklin. And Andy also wants to talk about the banking sector in the US and maybe even Warren Buffett. Andy, what does he know that we don't?
Mario, it's always good to see you, brother. It's fantastic to chat with you. I follow everything you do. Thanks for having me on. Yeah, what does Warren know? I mean, I felt for a long time that the banks are in a precarious position, to say the least. Over leveraged, undercapitalized. Warren is a great value investor. I've said for a long time that I thought Bank of America would be the bank that would act as the sacrificial lamb, not only because of their horrendous balance sheet, but Ted Butler, God rest his soul, before he died, talked over and over and over again last year of their massive short position in the OTC market of over 1 billion with a B ounces of silver and between 35 and 45 million ounces of gold short, naked short. And the existential threat that this presents to a bank like Bank of America as the price kept stair stepping higher and higher and higher and higher. So this pullback that we've seen, this correction that we've seen, I think, Mario, is something to be expected. Should have been anyway, especially with the euphoria, maybe the irrational euphoria, exuberance, as they used to say, irrational exuberance, and surrounding the Trump win. Which, by the way, I think it's appropriate to be optimistic and to have this euphoric feeling after everything we've lived through in the last 4 years, the craziness that in my mind is reminiscent of Bizarro World. It's right out of, you know, um, a movie, The Twilight Zone. I don't know, make up your mind. It's why I moved from Minnesota to Florida in the midst of this Twilight Zone movie, where everything from how hard you work and the merit that you bring to the table is secondary to your lifestyle, where questions of the judicial system, the FBI, the border security, the immigration system by extension, the electoral process, the lawlessness, the wokeness, the break from the nuclear family. I mean, it's like Rumpelstiltskin woke up and said, "What the F is going on? Where am I?" And that's kind of how a lot of people felt. And I think this breath of fresh air that Trump has brought to at least the American culture that has been largely whitewashed over the last 4 years, where I would argue that regardless of your political affiliation, my opinion is that the current administration, the Trump or Biden Harris administration, rather, has done more to destroy this country than any external foe ever could have, because of really whitewashing our culture. So to see a snap transition to risk on assets like stocks, like crypto, and an abandonment of the risk off, which is foolish in my mind because of all of the inflation and debt and all of the things that are baked into the cake, has been exactly what the doctor ordered for these sick commercial banks that have been bleeding and hemorrhaging week after week, month after month, as we've seen gold make new high after new high and new high, and silver stair step all the way up, as high as it got. We see in the silver market on COMEX, banks that were short between 7 and 800 million ounces, eight commercial banks from the West, holding the largest concentrated short position in any commodity traded. In fact, would you mind if I share my screen with you for 1 second?
Let me just enable it here. Yeah. Okay, go ahead.
Let me show you one thing here. I just want to show you one thing that I think it kind of underscores. Let me go to this right here. Okay, let me show you this.
By the way, I forgot to say It's great to have you on the channel again.
Yeah, it's always great to have you be here with you too, brother. And I'm now doing my own podcast, and you will be on my show very soon. If you haven't been reached out to already, you will be soon. Can you see that?
Yeah.
Okay, this is all I wanted to show you right here. This is a presentation I did not too long ago for Rick Rule in his conference. But the red line, this is Comex. The red line represents the big four commercial banks in the West, and the green line represents the four plus the smaller four. There's 8 Western commercial banks. This is their short position in silver on Comex. It's the largest concentrated short position ever seen in a commodity on Comex and in the little itty bitty market of silver. And it's interesting, you notice platinum, gold, palladium, the next 3. Look at crude oil way down here. So the point of it is that, and it's much worse than that. It's just what I wanted to show you here. It's much worse than that on the LBMA, where those banks were short between 4 and 6 billion with the B ounces of silver. And because it's a over-the-counter opaque market, we don't know exactly how much. But anyways, the analysts have said between 4 and 6 billion ounces short. So as the prices marched higher, this is bled these commercial banks. So to see an option for them to kind of straighten out their balance sheet is something that they certainly welcomed. And once you got this transition of the large managed money that has been wickedly long. In fact, if you look at a chart of the managed money, it's kind of led the price higher. Now that they have transitioned a little bit, capitalizing and jumping on the Trump trade, the euphoria. That's exactly what the doctor ordered for these less than honorable commercial banks who use that as an opportunity to smack the price even higher, to trigger the stops, to get everyone out, to think that gold and silver are dead. And it's now a new era all about risk on. But they've been able to close out their shorts. And I would venture to say when we see this next commitment of traders report that comes out, it will pay reference to that the commercial banks have flipped, have gone largely much longer, and maybe even the managed money gone short. Now, that's typically the environment that gold and silver bulls want to see. One of these days, these commercial banks will be run over, and maybe that's Bank of America. Maybe that is why Warren sold part of his, or the majority, $12 billion worth of his position in Bank of America, because the banks are over leveraged, the banks are undercapitalized. And while we're on the subject of the banks, the BTFP, the Bank Term Funding Program, Mario, that just ended just the other day, the day after the election. That was the liquidity pool that was thrown into the mix when Silicon and Signature failed. And at the same time, the reverse repo market, this huge slush fund of money, is that what you have up there? Oh, unrealized gains. Yeah,
Oh
massive
yeah, I've got
unrealized
that.
gains.
Yeah, I mean, this is a popular chart now. And what's amazing about that chart is the losses during the '08 crisis are minimal compared to what they're sitting on right now.
Right. And so I think obviously that is reflected in Warren Buffett's thought process. But when you see this situation where the banks are over leveraged, undercapitalized in these liquidity pools, in particular the BTFP and the overnight reverse repo market, one is gone and one is almost down to zero. It's as if the liquidity has been siphoned out of the system. Is this a setup? I would argue that the Fed wants to consolidate the banks. Jerome Powell told us that. Lael Brainerd, who worked at the Fed, who's now number 2 at the White House advising the Biden administration from an economic perspective, I argue she would have been the head of the Fed had Harris won. But she's a modern monetary theorist. This is exactly what modern monetary theorists would certainly want. They want to cull the banks and transition at some point to a CBDC. Now, I know that's contrary to what we've heard coming out of the Trump administration, but the deep state and some of these people pulling the strings probably have a longer time horizon to look at this. And I hope, my biggest fear is that they don't try and pull the rug out from underneath Trump and blame everything on him. But when we look at the banks, the setting is certainly, I mean, it's set up for it. And just to mention, I asked you if you knew of what happened with the Bank of Lindsay, Oklahoma. Your comment to me was, yeah, wasn't that a few weeks ago? It was. And it's interesting because I did several podcasts yesterday with people that I would consider to be incredibly well informed, including Vince Lancy. I did one last week with Jay Martin. These are guys that, I talked on the phone last night with Geo Griffin, um, who I'm going to hit or going to be presenting at his Red Pill event. These are people who study and read and research every day. And while they were aware of the bank failure, they weren't aware of what happened. And I think this is an important thing just to touch in case any of your viewers missed it. Now, I've talked a lot about it, and I apologize for being redundant for those who have heard it. But I want people to understand just how precarious the banking system is. And it is, Mario, it really is. And it's as if what just happened to little podunk bank in Lindsay, Oklahoma, flyover country was a trial balloon, and a trial balloon that gives the powers that be the ability to say, no, 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 what do you mean? We told you. Let me explain. So when Silicon and Signature Bank failed, they were illegally bailed out. And I say illegally bailed out because the Dodd-Frank Act in '09 said we'll never bail out banks again at the expense of the taxpayers. They will be bailed in. You are a unsecured general creditor, i.e. last to be paid. And when you deposit your money into a bank, in essence, you're not depositing anything. You're making an unsecured loan to the bank. All right. So with that being said, it's ironic that in the House inquiry, when those banks failed, it was the senator from Oklahoma that questioned Janet Yellen. And, everyone who's been following these channels for a while has seen that. But just to rehash, if you Googled Oklahoma senator questions Janet Yellen, boom, it pops right up. And he said, Madam Secretary, you just bailed out these banks. What am I missing? This is illegal according to the Dodd-Frank Act. And she says, you're right, Senator. That is true. But it was an uber majority vote between myself, the FOMC, which is the Federal Reserve, the FDIC, and the president. We deemed that these bank failures would be too systemic to the market, so we bailed them out. Not at the expense of the taxpayer, though. No, yeah, right. It's the FDIC that will cover it. Now, of course, you had Oprah's money in there and Hollywood money and Silicon Tech startup money, and to the point of hundreds of millions, if not billions, in uninsured deposits.
Yeah,
Bailed out.
Andy, I've got it here.
That's it.
Do you
That's
remember, I think it was a week or two ago, something was leaked from the FDIC, and it showed the companies that got bailed out because of Silicon Valley Bank. Uh,
right.
yeah,
Right. I
yeah.
did see that.
Do you wanna play
Yeah, go ahead. Go ahead, play it.
Langford?
Yeah,
Yeah,
why not?
it's ironic, isn't it? He was from Oklahoma, and now this bank is happening.
Yeah, because when I tell you what happened, I think it will put it all together.
Charitable
Can't hear it.
Hold
proposals
on.
on the table. I have a bipartisan charitable act dealing with tax policy, championing this, but because quite frankly, they're still there. It's one of the things that I think would hurt our energy. We now have from Japan and some of the banking
treatment.
Oh, here we go. Hold on.
regardless of their size, be fully insured now. Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVBP just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is
And
your
we made
plan?
that determination.
Right. So
to
what
these
is
two
your
banks.
plan to keep large depositors from moving their funds out of community banks into the big banks?
So there you go, Andy. It just seems to be that there's no rules really when it comes to they can make things as they go along. If Janet Yellen, the SEC, and the president determine that it's a threat to the system, they can just do whatever they want.
Right. And it's gross. And so, she says, no, that's not going to happen. They're unsecured general creditors. So we'll go and look at the Bank of Lindsay, Oklahoma, that collapsed 3 weeks ago. And the important thing to notice is that, they only had 7 million in uninsured deposits. That's it. It's a tiny little bank in podunk nowhere, whereas Silicon and Signature have billions in uninsured deposits in the tech startups and the Hollywood money and a little bit of influence, if you will. And she makes me so mad when I watch her. I don't know why it does, but she does. She makes me mad because she just lies through her teeth, it seems to me. Anyway, so let's look at what happened. So the FDIC comes in and says, yeah, well, the Bank of Lindsay failed, and the Bank of Duncan, Oklahoma, will resume. Will they'll take over their insured deposits, right? Their insured deposits. So the FDIC insurance limit is $250,000. So it goes on to say that the uninsured deposits, 50% will be made available. And the other 50% some of it may be given back in a pro rata fashion to the depositors after the assets of the bank are sold off. But earlier in the article, it talks about how the assets were or the liabilities were far greater than the assets owed to creditors and others, whatever the hell others means. But the point is, there are no other assets available to be sold off. They are owed to creditors and others. And so when you talk about what in essence happened, you have $1 million in that bank account. $250,000 you get, that leaves $750,000 uninsured. You get half of it, that's $375,000. That means 6.25 out of $1 million. You get that other $375,000. You might as well kiss it goodbye. You're never going to see it again. And that's a bail-in. Now, the part that I find to be so troubling, Mario, and a huge red flag to me is when Silicon and Signature failed, everyone knew about it. It was everywhere. We added 14,000 clients in 45 days. People were so panicked, and that yet they were bailed out. But this is, in essence, a bail-in. Imagine if Silicon only got 50% of their uninsured assets. You're talking hundreds of millions of dollars gone. So now this little itty bitty bank in flyover country loses 3.5 of the 7 million. Shh, don't tell anybody. That's what it's like. If you Google that, if you Google Bank of Lindsay, Oklahoma, you won't even see it. You have to Google Bank of Lindsay, Oklahoma fails. You'll find it. And you'll find that FDIC website that you just showed. And there's like one local Fox News channel in Lindsay, Oklahoma that has the story. Most of it is buried and you don't see it. Now, why isn't it covered on Bloomberg, CNN, Fox, every newspaper, every major media channel? Because don't you think people really ought to know what happens if you are over the FDIC limit, what that really means? It's like the FDIC video that was leaked last year where they said, look, if the people really knew how bad it was, they'd freak out and it would be a run on the bank. So let's not tell them. It's diabolic. To me, it's a trial balloon. So when the next big bank that fails, if indeed they wanted to create a run on the banks, to cull the banks, number one, they can say, what do you mean? It's right there on the FDIC website. We didn't hide it. In fact, there was a couple news stations that picked it up. It was out there. That is the law. That is the Dodd-Frank Act. Because all it would take, if you really wanted to call the bank and pull the rug on Trump, and you pull all the liquidity out of the banking system first, get rid of the overnight repo market, get rid of the BTFP, and then you let one large regional bank fail, and let people see this is what a bailout is. Now, most people, I live in a gated community golf course in southern Florida, and there's some wealthy people I golf with, and I talk to them. You know what a bail-in is? No, have no idea. There are people that own businesses all up and down this community, and almost everyone I've spoken to literally has no idea what a bail-in is. They don't know what a bailout is, and that's partially because the banks that have failed over the last few years have all been bailed out or gobbled up by JP or other regional banks. So since we're little kids and putting money in a bank, in a piggy bank, we think that banks are safe. It's not risky. Risk is stock market. No, it is. You are an unsecured general creditor, and anything over the FDIC limit, which in and of itself is fugazi in the respect that there's 148 billion back in 18 trillion and 7 cents on the dollar, if that. My point to you is that this to me is as scary as anything, not only because it represents a bail-in, but more because it represents something that hasn't been broadcast, hasn't been spoken of. And that, to me, it should be everywhere, just like Silicon and Signature were when they were bailed out. Everyone should understand this is the pitfall of leaving your money in the bank. They don't want to do that, but does it mean when the next one fails, they can say it was out there, go to our website, look at this Fox channel, we talked about it, and pull the rug? Because one bank fails, you can only imagine if a big regional bank failed, like down here in Florida, like a Truist Bank, which doesn't have the greatest balance sheet, used the BTFP to get some liquidity. If it failed and was bailed in, I mean, it's a large regional bank. Can you imagine what every wife would say to their husband the next morning, or vice versa? Get your ass up, get to the bank, and get our money out now, because I had no idea it was this risky. That would happen. It would create a run on the banks. Just bang, 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 bang. It would be a systemic chain reaction. And it's as if maybe I'm trying to cross the line of conspiracy and reality. But to me, there is a very fine line there. Why the hell are they not telling everyone that half of those assets are gone? So you got $1 million in that bank, and you just you're building a new house in Oklahoma, and it costs $1.25 million. You put $250,000 down on the lot, and now you start paying down as capital expense as you get it from the builder. Boom, it blows up. You just got $375,000 or $325,000 gone forever. What are you going to do about it? What's your recourse? How do you finish building your house? What the hell are you going to do? That's just one example. How about you own a business and have $5 million in operating capital in one bank? Because that's safe. Boom, gone. What happens to your business? I don't know. So I think people should understand the reality of this without trying to be hyperbolic, without trying to be sensationalist. I find it to be a very big red flag that this isn't covered by everyone. And I'm kind of screaming in the wind about this. I've even seen other YouTubers talk about it, but neglect to talk about the bail-in part. That, to me, is the most important and shocking development that I've seen in all of these bank failures, is the hush-hush attitude by the media and the lack of coverage of just what a bail-in is.
Yeah, and I mean that's what is supposed to happen, a bail-in. It happened in Cyprus, I think it was 2013. And like you said, it doesn't just affect individuals, private individuals. It affects small businesses that have to keep afloat or some capital in the bank. But I think what some people would argue, well, Andy, this bank didn't have that much in deposits, so it's irrelevant. But it would be, and then they'll say, well, it didn't pose a systemic threat to the system, but it would give more reason for Janet Yellen to bail out the bank because it's only a few $1 million.
It's $7 million. So they
Yeah,
took
yeah.
3.5 million from
So,
these poor
like,
people in flyover country.
yeah. But what you're saying though, BTFP, for those who don't know, it's this Fed tool or program, which is usually means printing money, that was instituted after the regional banking crisis last year.
Right.
So what they do is, because the regional banks, I guess, Andy, they failed because people saw the small print and saw that the bank's assets were like being like sold off like treasuries. They had loads of treasuries and they realized, wow, I got to get my money out. Treasuries have gone down 30-40% this year. So what the Fed has been doing since March 2023 is buy like treasuries that are worth 70 cents on the dollar. Well, they borrow that for 100 to pad up these banks' balance sheet. But now you're
Right.
saying that BTFP is finished, and you never know what could happen in the next 70 days or so until Trump comes in.
And the reverse repo market too. Don't
Yeah.
forget that's been a slush fund for these
Yeah.
banks in
They
order to
Janet
cover their inefficiencies or their inequalities.
Janet Yellen, if there is a banking crisis soon, she could just say, no, we're going to just cover the 250,000.
Yeah.
The bail-in is in the books, and it could create massive trouble. And even those people who have insurance think they have 250,000 insurance. That's not even guaranteed if the crisis is systemic, because I think the FDIC they keep maybe they only cover 2 to 3% of all U.S. deposits. I'm not sure it's the same thing here in the UK.
Yeah, well, and the crazy thing is, if you read the Dodd-Frank Act, I had nothing better to do. Um, it it says that if a bank completely fails, the FDIC takes over. They have up to 4 years to sell off the assets and pay the FDIC limit. It's not like you get it tomorrow. Now, in this case, they did, because it's the first tiny little podunk nowhere bank that is easy to bail out for their bail in for them or pay the FDIC insurance. It's a scary thought to me, and it's one that I think people should be aware of. Is it a trial balloon? And if not, why not more, publicity on it? Why why not does every YouTuber who is covering the financial space know about it? In fact, most don't, and I don't blame them. Most know it failed, but the lack of coverage has been such that if you don't really dig, you're not going to find it. And I think, to me, that's the red flag. It's the red flag, the lack of disclosure, and something that should freak the hell out of everyone. And that's probably why it hasn't been disclosed. It could indeed, just like the FDI said, well, if the people really knew how bad it was, it would create a run on the banks. There's that leaked video on YouTube also from last year. It's the same thing. It's like, don't broadcast this too much, because it will create too much a stir. So yeah, I think it's important to understand that we're far from, and you mentioned their treasuries. Well, what's happened since the last 45, 60 days, as the Fed has lowered interest rates on the front end, the back end says, no, 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 that's not how it works. You're not going to choose austerity or inflation over austerity. We're not going to take your duration treasuries, which I believe are uninvestable. To me, anyone that would buy a 10-year treasury paying 4.5%, when the numbers of inflation that we are given are so far skewed from reality, you're out of your mind. And so, I mean, you can get the same thing right now in a 6-month treasury and not have to have that duration risk, the default risk, all of the other forms of risk that are associated with the treasury market. If you're a foreign investor, certainly weaponization risk. And so I think that, it's interesting that the rates on the back end have gone up even higher than they were lowered on the front end. And that is what the banks own, the 10-year treasury. So their balance sheet just got crappier again. These are problems that are created through years of suppression of interest rates and pissing off Mother Nature. If you mess with interest rates and you create distortions in asset prices and misallocations in resources and in capital, there's no easy way to get back to where you were by yanking all of the liquidity out of the system. It creates a tremendous amount of instability in these banks that, for the entire pandemic, we're allowed to maintain a zero reserve requirement. And now, because of the Basel III revision of what banks have to maintain, it's 4.5%. So a well-funded bank has 4.5 cents on the dollar. So everyone freaks out, runs to the bank, give me my money. They got 4.5 cents on the dollar. So the banks have to sell those toxic bonds that have lost value again and put the bank in greater jeopardy than they already are, if not collapse the bank. So, not to be alarmist, but I think people should reflect on that and ask themselves, why the hell isn't it mainstream knowledge? And I would encourage everyone to Google bank failure of Lindsay, Oklahoma, and read the article. I think there's a Fox News channel of little podunk Oklahoma that talks about exactly what happened. And the fact that it's not mainstream is what really scares me or concerns me. Hopefully I'm wrong, but that's the way things are these days. Just a couple of crumbs is all they leave and say, well, no, 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 we told you. What do you mean? Anyways, enough with the banks. What else you want to talk about, brother?
Yeah, and just to add about the treasuries, the Fed cut rates on September 18th. The 10-year treasury was at 3.6, and we're now at 4.42. So
Yeah.
what that does, that lowers the price of the bonds, and a lot of banks, yeah, and pension funds, they're told to hold bonds because they're really safe, and
And
that's why.
insurance
Yeah,
companies. And I
yeah,
mean, it's
yeah.
a scary, scary thing. So think about that. They
Yeah.
lowered rates by 75 basis points, and it's up by almost 90 basis points on the back end. That is not what the Fed wanted,
No.
certainly.
So
And it's the market's way of saying, we don't care what you want, because the market actually is bigger than the Fed, unless we get to a point where you get yield curve control or monetization of assets, which the Fed comes in and is the only one stupid enough to buy the bonds,
yeah.
which then is just printing money to buy your own debt, which leads to Weimar Republic Germany, which leads to hyperinflation, which leads to rates ultimately going parabolic as a result. So yeah, it's, as the Chinese curse says, brother, may you live in interesting times, and these sure are interesting.
Well, what I wanted to talk about after listening to you about the banking sector, and I've told my viewers for years that I try to keep as little on deposit in the bank, just leave it enough to pay my bills and maybe some kind of rainy day insurance for a few months. Uh, I, I mean, it's obvious then that we need to have some kind of monetary asset that has no counterparty risk. And that is gold and silver, physical. And I've heard many people on YouTube, especially in the US, talk about how banks make it really difficult sometimes for people to transfer their money to bullion dealers, to precious metals dealer. So maybe you could cover that as well.
Yeah, it's a daily occurrence. It's the great inquisition when you go and have the audacity to pull money out of your bank. I mean, it's not even just to bullion dealers, Mario. It's just go and try and, you're going to go on a trip with your buddies to Vegas and you want to pull a few $1,000s out of the bank. They're going to say, what are you going to do with this money? Or when you deposit money into the bank, what do you intend on doing with this money? And in terms of sending money to bullion dealers, yeah, I mean, I think it was Wells Fargo who sent a client of mine a list of about 8 things to be after they gave him the Great Inquisition. Then they emailed him a list of 8 things to be careful for fraud. And this could happen if you're buying a commodity like precious metals, and boom, 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 boom. They're doing everything they can to make it difficult. In fact, I did a couple years ago, 2 years ago, we did 2 orders for over $50 million from 2 different clients. And the first client wanted us to tell publicly that this order was done without conveying her identity. And the reason I said, well, why do you want to do that? And she said, because I have all this money in a bank, and it took me almost 4 days, including having to threaten the bank with legal action for them to wire the money. The first day I called them, they said, no, you got to come into the bank. And the bank was in another state, not too far away from where she was. So she went and stayed with her sister and went to the bank. And she goes there, and the bank manager isn't there. He's the one who has to okay it. So they have to come back the third day. She comes back the third day, and they try and lock her in an office and tell her all the reasons why she shouldn't do that. She threatens legal action, and I'm going to call the comptroller of the currency, and I'm going to do everything I can to shut you down. Boom, 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 and then bang, they sent the money on the fourth day. And she wanted me to tell the world that it's a whole hell of a lot easier to deposit 50 million in a bank than it is to send it out. And this is exactly the problem. These banks are hemorrhaging money. Why are they hemorrhaging money? Because everyone's chasing yield. Where is that yield? 7+ trillion in the money markets, everyone buying treasuries. So the balance sheets of these banks are getting worse and worse and worse as deposits and money keeps going out of the banks into things that are paying a higher yield. And it'll probably only get worse. You see a bank failure, and then imagine what happens then. Look, this is your money, but the point is that when you put money into a bank, it's not a deposit, it's an unsecured loan. You are the last to be paid. You are an unsecured general creditor. And this is something that I think people need to understand, because from the time we're little kids putting money in a piggy bank, we figured that's a safe place to be. No, being in the stock market, that's risky. Being investments, that's risky. I'll just be happy being in a safe, a savings account. No, no, no. You shouldn't be happy being in a savings account. In fact, probably never been more dangerous, not only to losing your value to inflation, but to the systemic risk that is baked into the cake right now in the banking industry.
Yeah, so Andy, before we wrap up, I'm gonna bring up your website here, Miles Franklin, and maybe you could tell the viewers about the specials you have this week. And you remember a couple 2.5 years ago, the premiums are really high. How are the premiums these days?
The premiums are quite low right now. They're in my opinion the most affordable maybe they've been in my career, which is completely counterintuitive. This is kind of a neat coin. I'd never seen it before. It's a limited edition from the Royal Mint in your backyard. And the premiums on them are, this is on par with what you'll pay to buy just about any coin, less than that of an American Eagle. So it's a cool coin, and one that, I think is worth owning simply because it's a limited edition from one of the primary mints and being sold at a price that is not indicative of it being a special limited edition. So
Yeah. Is it a
I do like
one
it.
troy ounce, Andy?
Yes, sir. It
That's a
is.
really low premium, $99. It's
And
not.
I didn't know that lions and eagles were friends, but evidently they are, as you can see right there. The Silver Philharmonic, a great coin. A lot of people don't take this the wrong way, Mario, but a lot of people would say to me, "I don't want a coin with any of the monarchy on it." It was always Queen Elizabeth, and I don't want any of the monarchy on my coins. And this is a coin you can see both sides there. That's the orchestra, or the big organ on the Philharmonic Orchestra is behind that wall there on the right side, and then on the left, obviously some instruments that you would see. It's a very cool coin. It's a beautiful coin and one of the most commonly traded coins in the world. Love it. And one thing that's not up there that I am telling everyone, because I offered it to one YouTuber, is we have pre-65 constitutional junk silver at $1.89 over spot, which in my mind is the best value period in silver right now in the United States, because during the pandemic, premiums on pre-65 silver, because of its utility and functionality, were higher than everything we sold except the American Eagle, higher than all the sovereigns, higher than everything. And now they're less than the sovereigns. It's kind of upside down. So I think it's the best buy right now, period, with the greatest utility, $1.89 over. And the best way for people to reach us, because we only post limited pricing for very small orders on our website. But, for your listeners, please, with no obligation, have them send us an email at info@milesfranklin, and Mineko64 or Mario sent me. We will then send them, we'll answer any questions, of course, anything they've heard here, or questions on IRAs, or any of the questions that you have heard me talk about in the past, or Mario, we'll answer with no obligation. If you just want our price list, which is one that we don't publish, we keep close to the vest, but will be as good or better than everyone in North America, send us an email at info@milesfranklin, request a price list. No obligation. If you want to be contacted, put your phone number down. And one last thing is that if you haven't received a response within 24 hours or less, check your spam, because a lot of times when corporations, or in this case, a precious metals dealer, sends an email, a lot of times the spam filter will grab it and say that's spam. So check your spam folder if you haven't heard back from us. We're pretty good at getting back very quickly. And I got to just ask you, he was there a second ago. What you feeding that dog? That dog's not a puppy anymore.
No, let me go get him.
He's gotten a little bit bigger.
Rudy, come here. He's going to be 2 on the 1st of December.
Yeah.
There you go.
Rudy's gotten big. Hi, Rudy. Rudy is a very cute boy. Look at that face.
And you said info@milesfranklin.com, the email.
Yes, sir.
There's also a toll-free number, 1-800-822-8080. And
You can call that number, and most people in the States now have free long distance. They can also call 952-929-7006. And we're eager to help any way we can. And I'm honored to not only be on your show, but to work with you in any capacity that I can. as I mentioned to you off air, I'm going to be in your neck of the woods in Europe in March. I would love to buy you dinner, and hopefully we can make that work. I missed you last time I was there, but hopefully this time we can do it. I'm a big fan, Mario. You're a good man, and you're doing an amazing job of telling people what's going on. And for that, I'm thankful to have been on your show today, and hope to pick up where we left off real soon. And because President Trump was elected, and that's a good thing. We're not out of the woods financially and economically, and there's going to be a lot to talk about over the next few years. I hope to be a regular contributor to what you're doing, and you're going to get an invite to come on my show if you haven't already real soon. So, anyways, man, thanks for having me, and I hope you stay well.
Really appreciate it. And yeah, hopefully we'll be working together for many more years.
Forward to that, my man, and say goodbye to Rudy for me.
Yeah.
Look forward to chatting with you soon, buddy. Have a great evening.
You too. Bye.
Bye-bye.